Now, number 9 is where it goes from great to what the f*** in a hurry, people, because number 9 is... What's up, everybody? You know what time it is. It's the first of the month, which means I'm pulling the top 10 stocks bought on Robinhood last month, and I tell you where the good buys are, what were the bad buys, and then what the f*** were you thinking buys? Trust me when I tell you there is a lot of the latter in this list, folks. Wow. Just cue the intro. That's right, folks. The top 10 stocks that you out there on Robinhood are buying is on today's menu. What is up? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I want to help you own it in order to achieve that financial freedom you're searching for. And for those of you who are new to this channel, at the beginning of each month, I run over the top 10 stocks that Robinhood investors bought in the prior month and give my opinion on them, and also share some value lessons to be learned, and maybe poke some fun at some of these as well, because why not? Okay, so getting right to it, for number 10 this month is Tesla. Finally, Tesla returns to the top 10 list. And guys, this is absolutely something that should continue to be bought up, in my opinion. Ticker symbol TSLA is now trading at an all-time high of $1,135, and I'm just beside myself here. When anyone asks me about the number one stock they should buy and tuck away forever, in my opinion, it's Tesla. As of this recording, Tesla has officially eclipsed Toyota as now being the most valuable automaker in the industry. Honestly, I think this is a bit unfair to peg Tesla as just a simple automaker, and it's simply because of everything they're doing outside of the automotive industry. But I understand what they're saying. Look, 30 years from now, Tesla and Elon Musk will be in the history books for a lot of reasons, and it's because of the way that they innovate. All these other EV companies are so far behind Tesla's tech, it's ridiculous. Even car companies like Ford, Volkswagen, and yes, even Toyota are 5 to 7 years behind Tesla's automotive technology. Just this week, a leaked email is what's fueling the current rally that sent it to its all-time highs. Media outlet Electric reported that Tesla CEO Elon Musk wrote to employees, "Breaking even is looking super tight. Really makes a difference for every car you build and deliver. Please go out to ensure the victory." For investors, breaking even is going to be a really good-looking quarter for a company who was basically beat up by the pandemic. The plant shutdowns and falling demand for all the cars is really what's going to impact Tesla as well. Wall Street expects Tesla to lose about $1.16 a share in the second quarter, and I would be surprised if they don't beat those expectations. Remember, while the Fremont, California plant was closed for a considerable amount of time, Shanghai was only closed for about a week. And I think that China sales are going to really surprise a lot of analysts and investors alike. I love that Tesla is in the top 10 here, but I got to be honest, I don't love that it's in the bottom. Buy more Tesla, and I think you'll be very happy in the long term. Now, number 9 is where it goes from great to what the f*** in a hurry, people, because number 9 is Hertz. Ticker symbol HTZ is freaking bankrupt, people. What are you doing? And here's the sad part. 93,000 additional investors poured into the stock, giving it a total of 153,000 Robinhood investors that are still holding this as of yesterday. This is coming after the company announced that their shares are going to be worthless. Hertz themselves admitted this, people. Look, investing in bankrupt stocks like Hertz in effect means wagering against the legal process that wipes out shareholders. Even if you decide just to day trade this, it is important to understand the risks that are involved fully. You could be holding onto this thing at any moment and then poof. Literally poof. Shares are gone, full liquidation happens, and you're left with something worse than a red bag of shares. You're left with no shares at all. Anything that you put into Hertz will very likely be wiped out. Just run, don't walk away from Hertz, please. Okay, now that we got that over with, let's get into number 8, and that is Workhorse. And this one, while it's speculative, I'm still okay with, and it makes sense. 80% of you on Robinhood are right around my age and can afford a spec stock or two because we got time on our side, right? But the spec plays, in my opinion, still have to make sense. If you're going to invest in something, know what you're getting yourself into, and I think with Workhorse, it does make some sense here. Ticker symbol WKHS, however, is down 15% as of this recording at $14.30 and could represent a decent dip buy opportunity. Shares have gained more than 15% in 6 of the past 7 trading sessions, and Workhorse stock is up about 472% year to date as of Tuesday's closing price. The run has been absolutely incredible here, guys. The reason the stock has been moving so well recently has been because of good product news from the company on two fronts. First, the company said that its electric vans passed government safety tests. And then next, Lordstown Motor unveiled a light-duty pickup truck which Workhorse owns a 10% stake in. This surge makes way more sense than that of some of the other EV movers this month, as they actually have a product and Workhorse has that first mover advantage with electric vehicles for last mile delivery. United Parcel Service, or UPS, placed an order for these electric vans as well. What's more is the potential USPS or Postal Service vehicle replacement contract decision that's expected later this year. This could be a major development if they land the post office as well. I like Workhorse a lot, but they have a long road ahead of them still. Three things need to happen in order for Workhorse to keep rolling. One, they got to get moving on van production before Tesla starts moving in on them. Two, they need to avoid dilution and big offerings, which is probably one of my biggest concerns with them. And three, the Lordstown partnership needs to go off without a hitch. If all of that happens, I can see Workhorse nearly doubling from here in the very short term. Okay, coming in at number 7 is a great one, and that is Amazon. Thank you, thank you, thank you. Ticker symbol AMZN is up over $300 a share over the last couple of days, and this is going to keep ripping, I think. This is one of my Rona-proof, recession-proof stocks that I have mentioned over and over again, and when everyone else is laying people off, e-commerce companies like Amazon have been hiring people like crazy. Nearly 200,000 new employees since mid-March and counting. The demand for Amazon orders has been nuts, and for obvious reasons. People either couldn't or now don't want to go out and expose themselves to the pandemic, and when you can order food and that ever so valuable toilet paper, as well as just about anything else from one place and have it delivered to your front door, it only makes sense that it'll continue to climb even as things get back to normal. Whatever that ends up being. Next up is number 6, and it's Apple, which I got no problem with either. I mean, what's not to love here? A great company who is not quite as Rona-proof as Amazon, but with their digital services starting to become a huge source of that income for them, it could start to very well become just that. Despite closing down stores and taking precautionary measures to keep their employees safe from the pandemic, Apple still managed to pull out some incredible earnings, and to me, if you can thrive through an economic depression like the one we're seeing, what's the value on that? If it's thriving in a time like this, how do you kill it? The bottom line is you can't, and that's why I love this stock, and applaud the 103,000 of you on Robinhood who hopped on this one last month as well. All right, let's see, number 5 here. What do we got here? Oh, for fuck's sake. American Airlines? Seriously? You know, this is the one airline that made the top 10, and of course it's the worst one to own. They have the worst break-even load factor, which means the amount of customers it takes just to break even on a flight, which is over 80%. They have the most debt and are burning through the most cash than any of the other 4 big airlines. It's so bad that not only have they taken billions of dollars to get bailed out by the government, but they've also issued 2 giant offerings which will eventually crush investors, in my opinion. American Airlines is likely the most at risk for bankruptcy, and yet people continue to buy it. In fact, over 106,000 of you on Robinhood hopped into it just last month to bring in a grand total of 650,000 investors who own American Airlines. Oy. Look, I know you want to own these stocks because of how far they've come down, and we're starting to see an increase in demand of flights. United Airlines just announced they are tripling the amount of flights booked in August. All great stuff, but in my opinion, you're going to the wrong company. Going with a company that has a low break-even load factor and a decent balance sheet is the way to go, as they will come out better and faster as demand starts to slowly increase. Southwest, ticker symbol LUV, and Spirit Airlines, ticker symbol SAVE, are set up to be the best ones, in my opinion, for the quickest recoveries, with Delta not far behind them. Next, coming in at number 4 is TOPS, ticker symbol TOPS, and seriously, I have no words for this one. I don't know what the allure is here or what you heard from some other YouTuber, Twitter, or Reddit person, but do yourself a favor and don't buy another shipping company for as long as you live, unless you actually know how to trade them. You see, these companies are loaded with debt, and the only way they pay for this is through you. All the debt is convertible, which means they constantly dump shares on you, diluting the stock. It's the same cycle over and over again. Either they pump up the stock to do a massive offering, and then the joke is inevitably on you, or they dilute the stock so bad that they have to do a reverse split to stay on the NASDAQ, which in turn still screws you over. So just, Look, I know you're trying to make a quick buck here, and like I said, it's fine if you know how to trade in this type of cycle, but by the looks of it, 111,000 of you poured into this thing, and over 200,000 in total are stuck in this turd. Lessons learned, right? I hope so. Pay your tuition to the market and move on from this one, in my opinion, and never look back ever again. All right, guys, now before I get to these top 3 here, I want to invite you over to the Chaos Crew. If you click on the join button next to subscribe, what you will get are some pretty sweet looking badges specific to Own the Chaos. You can't find them anywhere else, and you get a daily watch list from me as well every single morning, an hour before the stock market opens. I compile my top 5 stocks that I think will move for the day, and for $4.99 a month, I think it's a pretty sweet deal, and if you agree and would like to help support this channel, I would love to see you there. By the way, I have had some comments that some people can't see the join button, which I don't know what's up with that. I've tried to contact YouTube about it, but they don't know. And so I provided a link in the description as well if you can't seem to find it next to subscribe. All right, guys, so number 3 here is IDEX. And honestly, in my opinion, it is a clear pump and dump. Loads of allegations of fraud on this thing, and whether it's true or not, it is not a good look. It is a Chinese EV company who have reportedly announced that 200 vehicles have been ordered through them. This is another one where people get into it like many of the other ones we've seen, and it's like the last 1 ounce of rotten egg. It's down nearly 75% from its highs just days ago, which is just god-awful. If you traded it and made money, great. I'm not taking anything away from you there. But to the 114,000 of you who are still sitting in this thing, you're likely in the red, and I don't see a scenario where you'll get green on this. I could be wrong, and there might be another pump later on to kind of get you unstuck here, but I would not want to be holding on to this bag for too much longer. Number 2, and what else can I say about GNUS brands that I haven't already said? I got so much crap for telling people to run from this, and then what happens? Exactly what I said would happen. Not even Arnold Schwarzenegger could save this turd. Here's what happened to this if you're asking yourself why this keeps going down. It has everything to do with dilution. The company originally boasted how they were going to air their children's TV show on Amazon, and Mattel was going to make their toys, and everyone went nuts over this. Investors got hyped on these developments by the children's entertainment company that caused the stock to surge 2,400% in the span of a month. That was incredible, topping out at nearly $12 a share before beginning its long descent, unfortunately. And guess what happened in that span as well? Offerings. 3 of them in 4 weeks' time, and they did it right under your nose, guys. They pump the stock up like crazy and then issue offerings at a higher price so they can raise capital. GNUS has been losing money for well over a year, and the revenue from their existing programs just aren't bringing in the money either. They will continue to dilute, and in my opinion, there's nothing saving it from itself. The stock now sits at $272, and it's down nearly 90% from its highs. Just unreal, and it's just sad for the 177,000 of you that are still stuck in this thing. Another lesson here, folks, in my opinion, make sure that you know exactly what you are investing into each and every time you hit that buy button, people. This kind of crap in Pennyland happens all of the time, and you gotta know when to get out when the going gets good. Otherwise, you'll get seriously torched, as many of you did here. Okay, and finally, coming in at number 1, drum roll, please. I said, drum roll, please. Yo, wake up over there. Okay, thank you. The number 1 most popular stock on Robinhood in June is Nikola. And yes, that's right, folks. A company who has no product and no current operations and no revenue whatsoever is the number 1 bought stock on Robinhood last month. Ticker symbol NKLA went from 0 to over 149,000 investors, just like that, and it's really crazy to me to look at this and see that Tesla is sitting at number 10. Look, this won't end well, and there's literally no comparison to Tesla the company and even Tesla the stock, despite people trying to do so. Before Elon even took the company public, he at least had a product. The original Tesla Roadster was actually a real thing, and Nikola's plans here are super speculative at best. The technology that Nikola has isn't even close to what Tesla has, and the infrastructure they plan to build as it revolves around hydrogen is going to be 5 to 10 times as expensive as the infrastructure for electric that Elon put out. Even if everything goes right according to their plan by 2024 with sales, building out these stations and the like, Nikola is still 3 times what it would be worth then. And if everything goes the right way. Not only that, but they recently announced a 77 million share, not dollars, shares offering that will likely dilute the hell out of this stock. And I could see this getting below $20 or even lower than that. It's just me being honest, folks. I'm not hating on the stock. It's just when you look at the fundamentals, and you look at everything that's going on with this company, that's a very likely case here. Look, there's a couple of things on this list that have taught me a lot here, and that is a lot of you are investing in some really great companies, but many of you are just trying to chase the fast money without even really knowing how to trade or what it is that you're even trading. Investing in good quality companies like Apple, Amazon, and Tesla are great ways to get started. Some spec plays are too, and I think Workhorse is also a really good example of that. That being said, let me know what you think about this list in the comments below, and if you missed my video on the top 5 stocks under $10, click this video here, or if you watched how I called the GNUS and Hertz drop, click this video here. I feel so bad for you guys. And as always, folks, I will see you all before the bell, and B. Smith is out.